one of the big things that we saw this year was a lot of focus on the Mag 7. And while the Mag 7 had very, very strong returns over the course of the year, and US large growth stocks had strong returns over the course of the year, there was strong returns in lots of different asset categories and lots of different markets around the world. The US certainly led in terms of returns of that almost 22% return at 26. But developed ex-US and emerging markets, if we had told you at the beginning of the year that they would return 17 and almost 12% respectively, you would have been very, very happy with those returns over the course of the year. So let's talk about the US then for a moment. The Russell 1000 value ended up about 11.5, 2000 value 14.5 or so. Again, if we had told you those were the returns that you were going to get from value stocks over the course of the year, you would have been quite pleased, because those are returns that are somewhat in line with historical average returns for value stocks. But what did we see? We saw outsized returns, and particularly for large growth stocks. So we have the Russell 1000 growth there at almost 43%. Now, certainly that wasn't expected at the beginning of the year. It's an unexpected outcome. In some years, you're going to get unexpectedly good outcomes for groups of stocks, but that should not change your expectation about value premiums going forward. Just to put it in context, for the next 30 years, suppose growth stocks had a 43% return a year. $1 million invested today would result in $45 billion in 30 years' time. How likely do you think that is, Mark? That is not likely. So while returns were very, very strong on the growth side this year and resulted in negative value premiums in the US only, we would say that's kind of largely an unexpected outcome with respect to returns.